All right, imagine this. You're trading stocks, making some gains, and then bam, you find a strategy that could literally 10x your profits. Sound too good to be true? Well, it's not. It's called LEAPS. And today I'm going to show you how the strategy can completely transform the way you trade. Check this out. I made over 300% on one trade, over 250% on another, and even a solid 50% gain, all using LEAPS. And I'll show you exactly how. Now, LEAPS aren't your regular options. These are long-term stock options that savvy traders use to maximize their gains. I've used LEAPS to consistently boost my returns, and in this video, I'll break down what LEAPS are, why they work, and the simple steps to start using them to 10x your own gains. Trust me, you don't want to miss this. Before we dive in, let's talk about the magic of leverage. With LEAPS, you don't need a mountain of cash to make serious returns. I'm talking about taking a fraction of what you'd normally invest and letting it work way harder for you. Like in my Tesla LEAPS trade, where I turned $5,000 into $20,000 for a massive 305% gain. Okay, so first, what exactly are LEAPS? LEAPS stand for Long-Term Equity Anticipation Securities. Fancy name, right? But really, they're just option contracts that last over a year. So sometimes up to 3 years. Now, instead of buying a stock directly, which can tie up a ton of cash, LEAPS lets you control the same stock with far less money up front. You're essentially renting the stock, but with a huge potential upside. Now, here's why this matters. Imagine buying a stock, say at $100 per share. If the stock price doubles, you double your money. Cool, right? But with LEAPS, if that stock goes up, you make way more because of leverage. And don't worry, I'll show you how this works with numbers in a second. Okay? Now, before we go further, let's tackle one big question. And I always get this. Is this risky? Yes and no. Just like driving a sports car, it's safe if you know how to handle it. And that's exactly what I'm here to help you with. Understanding when to use LEAPS and how to maximize the gains while keeping risks in check. So, if you're wondering, should I just buy regular options instead? Here's a scoop. Regular options expire too fast for most beginners. LEAPS, on the other hand, give you plenty of time for the stock to move in your favor. That's the secret sauce here. More time means more chances to profit. All right, let's break this down into steps to start using LEAPS effectively. First up, choosing the right stock. Not every stock works well with LEAPS. We're looking for big, stable companies with solid growth potential. Think Tesla, Apple, Microsoft. Stocks that are likely to keep moving up over time. Next, you'll pick your expiration date. Here's the golden rule. Go long. You want LEAPS with at least a 1-year expiration, preferably 2 to 3 years out. Why? More time gives your trade breathing room to recover from dips and capitalize on future growth. Remember, patience pays off with LEAPS. Now let's talk about strike prices, where it gets a little spicy. All right. Ideally, you want to choose a strike price slightly above the current stock price, something like 5 to 10% higher. This keeps your costs down while maximizing your potential upside. For example, in my HIMS trade, I went with a $15 strike price, and the results? Over 250% returns. Once you've chosen your LEAPS contract, you're in the game. But here's where many traders mess up. They sit back and forget about it. With LEAPS, you want to keep an eye on your position because opportunities to take profits early often pop up. Okay, you don't have to wait till the expiration. Here's my rule of thumb. If you're up by 50 to 100% on your LEAPS before expiration, consider taking some profits off the table. I know it's tempting to just let it ride, but locking in gains is key. Remember, cash in hand is cash that's safe from market reversals. All right, now that you're holding LEAPS, let's talk about managing them like a pro. A lot of people think that they can just buy and forget, but the magic happens when you're actively managing your position. For instance, in my Tesla LEAPS, when it hit that sweet spot and I saw resistance coming up, I saw a 305% gain. I knew it was time to lock in profits, so I got out. You don't want to miss those opportunities. Another tip, don't fall into the hold forever trap. LEAPS are powerful, but they're not invincible. If your stock's momentum stalls or starts to dip, consider cutting losses or switching to another LEAPS contract. The goal here is to stay nimble and adapt as the market changes. Now, one question I get a lot is, what if the stock goes down? Well, great question. With LEAPS, you have time on your side, but it's smart to set a mental stop loss. If your stock is down 30 to 40% and it doesn't look like it's going to recover, it may be time to just cut your losses, and it's better to lose small than to hold on and watch it go to zero. And here's the thing, leaps give you leverage without the stress of short term expiration dates. So you're not scrambling against the clock. You're not just betting on quick moves, you're betting on long term growth. And that's the beauty of leaps. They're like the best of both worlds between stock ownership and options trading. Oh, and one last thing. If you found this helpful and want to dive deeper into strategies like this, hit that link in the description below to join my online community where I share trades that I'm actually making, my insights, and I help traders just like you achieve consistent gains. Let's keep building those profits together.